None happening. How's everyone doing? We all good? Hope so. What's going on? Good, and you? Yeah, great, thank you. What's going on, Alex? So we don't have a huge amount going on at the moment. Pretty quiet. There was a sweep out here this morning. Actually, was that this morning? Okay. Let's see. Again, so we swept this low out. Crazy going on. We're looking for a new all-time high on this. Remember, we did give out the markups in our trading view, so you can go and check those out. They've actually played out pretty much perfectly so far. Play this from here. You can see it's starting to push up. Cool. The other setup was, well, it wasn't even a setup, but Euro played pretty much bang off of there. We're now looking for that short side market to come back in. We'll see what happens here. Now, we have also swept this high. This high sits, but this is, of course, counter, so I'm not looking to actually try and trade off of this. Right there. The only trade that I've taken so far this week, this one. So we had an initial move here. The Euro GBP, by the way. These were the entries and areas we showed you guys this last week. These are your targets down here. Okay, super simple. We gave the entries, and you can see here, this is a high. Okay. Took that high out, come down to the 15. That high taken out, went from bullish, cross over to bearish, gives us our area of institutional involvement. Stop goes above the point where they got involved. Then you trade down into those lower targets. Exactly what we're doing. So we're break even on this right now. I actually got two positions on this. One of them right here and then one of them here. Nice little double up on that one. We're looking for this to run into the lows now. Hopefully we can carry it all the way down to the major here. 8. But we'll see. First target and first element looking for price action to reach is this low here. Did everyone have a good weekend? I hope so. Here, that goes off, then we're BE. If this goes off, then we're into partial out. Or at least protect down at another point of relevance. So let's go to Euro NCD here. Remember we were giving target highs all week. actually showed you how we took this trade and marked it up on our live stream. We didn't follow it up to these highs, but that's the move right there. So clean. And this is using the same point of reference here. Look, we're looking at highs being the points that we're targeting, right? Low gets swept. This low was kind of a bit artificial way. It's not really a true liquid low, but this low right here, price comes, takes it out, come back down to the 15, the low, but from sell side over to buy side, tells us where the order is, tells us where the liquid is, where's the stock going. Brilliant. Perfect, right? Did actually do a reel showing that. We didn't trade it. So now, it had a mover open where we took out this low, but it's not something that we could trade because this market open, the spreads are unreasonable at that time. And reference off of this low. Liquid low point here. Targets would be high again. Really simple, not much to go off of there. What's up, brother? How you going? Did you see the setup on USD JPY? It looks quite promising, right? I haven't seen it. We will have a look at it. Go have a look. Setup on you. Oh, I imagine you're referring to just this hourly shift here, right? I remember you were saying that you're referencing off of just the raw mechanics of what we were showing you guys before. The reason I'm always cautious of these is when you have a gap like that, most of the time that gap gets filled. Most of the time. Not all the time, but most of the time. 1 hour time frame? Yeah, exactly. Yeah. Yeah, I see you. Yeah, I'm just being cautious of this gap. And then JPY. I don't even have code. Add it. Apparently I did. Okay, so CAD's actually filled the gap. Yeah, same point. Gap fully. Same point here you're looking towards. But yeah, that looks pretty good. Looks pretty promising. I would always be excuse me, be cautious with these spaces that are left though, market open spaces. That's one thing I would always be cautious with. Just because if you go back and reference any of the other points where it's done this, sort of like that, you see like this is a Friday, that's a Sunday. So it left technically a gap here because price went immediately up. So there was an area price hadn't been fulfilled and then it comes down, then it goes. We can probably find some other ones. That's a Sunday gap, but it just goes up. So sometimes it doesn't. I'm always just cautious of that. Here, leaves a gap. In this case, it goes up for quite a bit first. So it's not always the same. I'm just relatively cautious with it. It's just because of past experiences, knowing that it's happened before. I'm like, it. And if I'd mainly be looking here and here. If we're lucky enough to see price push back down into this area. Let's get this up into the JPY pairs. At the high, we've got this high right here as well. That's cool. 1 hour, still the same points of relevance. 15-minute. Now, I mean, gap low there. Super simple here. Look at the way this has worked. So clean. Look at this, right? Here, took out a low. Our bias was bullish. Price gets swept, goes bullish. Here we come down, take out the low. Price gets swept, we go bullish. We're bullish again. Price takes out the lower points, goes bullish. So clean. So same point again here. Just my personal preference again. But the also applied a lot more caution to gaps on JPY. Okay, yeah. But in the end, it's just another thing to analyze your trades on, so you can see in retrospect what works and what not. Exactly, yeah. And this is another thing as well. Just because it's taking you out once, don't mean it'll take you out twice. It's one of those things where you can factor it in or factor it out. And what I've learned over the years is that anything that gives you more vulnerability to a system, generally you just want to factor out. But if you're using, excuse me, if you're using the 1 hour system like you are, so you're only referencing 2 time frames, so that's 2 variables, and then you're using 1 entry point and 1 low, that's 4 variables that you have in place. Whereas I'm using daily, hourly, 15-minute, that's 3 variables in it on its own. So you can pick up the risk from variables that I would avoid and you would use, for example. So there'll be, let's say let's say there's 10 trades with a gap and it takes you out of 50% of them. There's 5 trades that you'll win that I would never be involved in any of them anyway. So it's one of those things where each point is going to have its own relevance for you. So this is something as well for anyone that's new to the stream. Just because I say, oh, I'm not going to take this, everyone that follows the work that I do and the information I give out knows that they are completely free to make their own decision based off of that. You don't have to do what I'm saying, is what I mean. Make your own decisions and trade your own basis using the rule set that we've given you. That's the most successful way. Hoping to see a big old dump here. Yeah, so we also had a sweep here on two. See, we open up a gap. See. Did everyone have a good weekend, Joe? I hope so. Right. We'll check back on that. Euro, again for reference, we haven't come and taken any major points yet. This is a relatively strong area of supply. Point where we swept out the last point of liquidity, and this is the area that the orders are in. So there is potential for this to sell through those from here. Give that out in our weekly outlook. And so AU is a great example of price action just not delivering entries and just hitting targets. That might not be an entry point. Either way, it's just not interacting with any of those points, which generally, if you see a pair doing this, means it's going to do something like this, where it will run down, and instead of going, it will go. All right, so keep that in mind. Okay, so U-Chef interacting with the liquid lows here. Point to keep in mind. Remember we had two entry points here. One was here with your stop under here. Price ran partially, then it came back down. Then we had another sweep, and we gave this as the entry. Stop would go here, this being the target. Price hits that target. Now it's coming back down. So the same relevance comes in if we have sweep of the low, sweep of the low. If we have price action delivering from here with a space of some kind, we can look for it to come back up from there. Take it easy, Shotmaster. I know how you go. Come on, Euro. Push. Okay, morning, Primus. How you doing, man? Well, good, my man. Right now, we did go back an hour in the UK. for anyone that's wondering. Hence why we're a little bit late today. It's technically like 4 p.m., but it's only 3 p.m. we started, so. Remember, guys, if you want to be on the shortlist for our automatic trading bot, then you can find the shortlist link in the Discord. So you can find the link for the Discord in the description. Also find a link for our partners, NSAB Investment. If you want to make some hands-free profits, they are the guys who do that for you. Yes, tanking. Nice. Very nice. Keep an eye on you, Sheffield. We posted a reel on Friday. If you haven't watched that reel already, it's a bit, yeah, it's not the best. First is sort of like a tester. So, yeah. We just explained in that reel how we showed you guys the Euro AUD. Long that we showed you guys was Euro A. Oh, Euro A isn't on it. Here. Hold on a minute. Oh, is it Euro NZD? Oh. Yeah. Well, I made a reel with completely the wrong titles because it's not even the right pair. That's stupid. Okay. But yeah, the Euro NZD long. Oh my lordy. Look and see what we have here. Pretty clean moves on Euro A, to be honest. Bias long on that. Pretty clear this off. So looking at the 4 hour, you can see that we can only really reference off of points to the left here. We don't have anything above current price to reference off of. Go to like the 15-minute chart, you can see again how it's building up that liquidity. What we said before, then price will sell off into these lows and everyone at that point begins selling. When we then look for that shift, which often takes a lot of people out. The reason for that is because the point that there's a massive shift, everyone starts thinking that the high is a safe point. They say liquid, and it in turn becomes the target for that liquid. And that's what we're looking at for UChef. Is everybody saw this go long and they put their stops under here. Price has now come tumbling back down, so they're now piling their stops up into these highs. Amazing money signs. So a continuation up through these highs is probable because it's trend direction, and it's probable because of the psychology behind what's happening in terms of where are people putting their money. targets are pretty sparse. We have one high to target. So has everyone watched the Keep It Simple series? If you have, let me know. Let me know in the chat if you have. Pretty clear. That. You notice something here. Notice how there's a movement here. Here, gold drop. But that trade would have not worked. Now, the reason why that wouldn't have worked is because it's the relevance. What are you seeing here? Does it relate to what is going on? Is there liquid over this side? And when you look across onto the 4-hour chart, there's no lows in here. Just continual structural movement. Of course, lows on a fractal basis, but there's no liquid low that we would look at and reference off of. Nothing for this right now. Waiting for the gap. Remember, guys, as well, if you haven't watched the Keep It Simple series, go and watch it because the relevance of it is significant. Now, the reason I say that is because so many people spend their time chasing profit around when you can really take a much more subdued step back and relax when you're looking at price without having to rush around and we don't need to do that. Look at what we have. Is there something here? No. Cool then. Leave it. It puts you on the other side of the fence from the majority of people that spend their time like this. Because they're hunting and hunting and hunting and hunting. Now, of course, if you like trading on a lower time frame, that's fine. If you have a system that you can apply to 1 minute time frame, that's fine. And I showcased the same principle with this system itself. Sorry, not with this system, but with this using the Keep It Simple basis. I showed you guys. Let's go to a completely fresh pair on, let's go like Euro JPY. Euro JPY, right? Euro JPY, just delete 365 drawings somehow. We'll condense this down and we'll rewind it here. And you can use the 15-minute as a reference point for your higher time frame, the 5-minute as a relevance for your entry, then the 1 minute as a point for your entry itself. So right now, our reference point would be bearish. We go to the 5 minute, we look on the 5 minute time frame, we find points of relevance on that 5 minute time frame, we look to the 1 minute for reference for entry. There's an entry right here. If price sells off of that, awesome. We look to target down into the lows like so. Right? If it works, amazing. If it doesn't, then so be it. Okay, so tap in, and you'd be BE right now, and it goes TP. I've just shown you that, thrown that up on the chart, and shown you that within, what, less than a minute, using 3 points of relevance. Let's go back to the 15 minute. What's going on the 15? Still bearish. Cool. Go back to the 5. Okay, where are the points of relevance on the... And you guys saw me pull this, it's completely random point within price. I don't know what's happening on this chart at this time right now. I've just literally thrown it up. We're referencing off of the 15 for our higher time frame. We're referencing for the 5 minute for our point of relevance. We don't know what the daily's doing. We don't know what the weekly doing. We don't know what the hourly's doing. All we're doing is waiting for these points to be hit. Are they hit? Point of relevance there as well. Down to the 1. Okay, there was no bearish gap opened up there. Okay, there's a bearish gap opened here. Honestly, the time on that, yeah, I would probably say this trade will fail, but the reason for this, okay, before I enter it, is we have relatively equal highs here, okay, meaning that the probability of these being swept is higher. There's also better probability off of something longer term in terms of structure, but we can reference it here. Is the 15 minutes still bearish? Yes, it is. Is that a 5 minute point of relevance? Yes, it is. 1 minute, cool. Stop above this high. Tags you in, takes you straight out. Cool. Go back down. Remember, we're already up from this trade, 4R. Now we're getting into these points. Do we get any reaction here? Yes, we do. So we can then actually use a better point of relevance here. And we look to sell it down into the lows. So there you're in, and you get taken out. If you got BE'd on that, so be it. If you got taken out with a stop, so be it. You're still 2R up off of that, just movement there. And this is only price action from 6 a.m. till 7:45. This is what I was saying before. The relevance of what you're trading and how you're trading it is based off of the system you're using. So looking at what I show you on the stream, you can't jump into the stream for a couple of minutes and go, oh, this is pointless. What's the point of this? I don't want to follow this because of the la 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 la. You can do that if you want, but the relevance isn't going to be the same unless you're using that system. And look what happens at the end here. We come up to the liquid high, we break down and we sell across down into all the targets that we were trying to hit earlier. And again, I'm not saying do this every time, get these entries, but look at the relevance here. And like I said, you'll have someone on YouTube that will come and say you could have traded the 0.2 pips from this point to here and from here to here and there to there. But the relevance is how little time has it taken me to show you this? Seconds. Taken seconds. And if the outcome is overall 2.4R, a couple of hours, that's great. Just understand the principle of the time frames you're working on. Really nice move there as well. Still running. So let's just have a look here and look at the principle of this. that we were bullish here, right? So we go down to the 5, and the only point of relevance is here for bullishness. And delete. The only point of bullishness, relevance for bullishness, yeah. Go down to the 1 minute, we take this out. Your bullish gap comes in there. That's where your entry would be. Your stop below the low. That doesn't trigger, and there's no way that triggers in with spread. That's where your entry would be with stop below the low, and you'd be targeting up at these highs. So can you see again the relevance, the difference of on the 15 minute, we're still looking for this to give us an entry. We're looking for potential moves. On the 1 minute, you're going to see the entries given a lot more consistently, but they're not going to necessarily give you a better hit rate, which is a complete sort of gazy where that the trading industry has sort of done. What it's done is it's created people that spend their time telling you you will be 100% correct if you do this or if you do that. 100% hit rate is nothing more than a lie. That is not true. Now, again, someone can pull up a trading account with history and show you 100% hit rate. But the probability of someone being able to replicate that is very, very small. Risk of ruining on top of that account is going to be wrong. And again, this isn't my opinion. This is statistics and fact. It's numbers. You can't lie to numbers. Numbers do not lie. It's like flipping a coin and expecting the probability to be more than 50% over the space of 1,000. It won't be. It might be over a short period, but not over a long period. It's as simple as that. You're looking at it here. Looks like it has a lot of potential, to be honest. Again, let's reference off of this. Okay, so if your bias right there, it's bearish. Okay, it would have been bullish back into here, but bearish from that. Go to the 5 minute. 2 points of relevance. Do we produce any more? Produce one more. Okay, no gaps, no gaps, no gaps. Gap there, but you've hit your targets, so you can't trade that you've already hit your targets. Price pushes up. Aim for these highs. We are looking for the highs. Go back to the 5 minute. Don't want to miss any points of relevance. Like we missed this one. And this one. Okay, push up through there. Let's see. So here is actually a great example of if you're not paying attention to the points that you're analyzing, you won't catch them. Take out this point. That's where your entry is given. That's where your stop goes, and you'd aim for the lows. Now, in this case, it doesn't get down to that. Yes, you can take partials, so on, but the importance is that you're giving relevance to what you're trading. Back to the 5. Blasted through up to the high, taken that as well. Okay, so your stop would be up here, your entry would be here. I want to do be like that, so you technically be tapped in already. Yeah, that would be tapped in. And you aim down through these lows, what we were showing you before. Then you come back up. If you went BE on that push down, you would have got taken out of BE there. And then you'd look to follow it down through the lows, even if you take it down to here. Still a solid 2.5R. Alright, it's the relevance principle. Not the is it going to be 100% hit rate 100% of the time. And then even if we come out of this, right, and we reverse it back again, come down to like here. Before this gave us a bearish move, we'd be looking for these points, price action, to give us a reaction for bullishness. When it gets down into these areas is when it changes the bias for us. So we then immediately say, well, price action's changed bias now. We now have to reference these points up here, right? Which means if we're looking price to give us an entry here, or we want to sell from here, theoretically means you can continue to play the bullish bias of price reaching those points. Because without price getting here, you're not selling it. When you come down into these lows, you can look at this, or price potentially going long. In that case, you may have been tapped out there. I doubt it, but and you get a nice little push, right? You say, cool, I'm trading counter my trend here. I'm going to get out. And the same bias continues. This is what I was saying before. What's going on, Antonio? Hope you're good, brother. This is what I was saying before in terms of follow it with the basis of what am I trading? How does this line up with what price is doing? Yeah. So we're looking for a nice push down to this low. Once it hits this low, then we're going to look to secure some profits on it. Let it continue. I said earlier, I hope everyone had we're still looking potentially a gap forms here. Point for price to sell from. If this gap forms, we've got another 12 minutes. So size of that gap, very probable. But if we reference off what we have, right? Just rewind to here. We create a bullish gap. Go down to the 5 points of relevance. Depending on broker, this may... That is actually a low. Okay, so here. Here. We're looking for price to interact with it. Putting a low here as well, but again, short-term low only. Again, no gap. There's a gap here. You'd look to follow the bias of that going back up from this point. Okay, tags in, beautiful move. Again, remember the principle here is that you're not looking for a long-term shift off of every lower time frame because you're referencing the 15. Your targets would be within the 15 time frame, within the 5 minute to 15 minute time frame. So if you're lucky enough to get up to one of the higher points here, then you can look to sustain that, right? So price comes back down again, takes out the low, go back to the come back to the 1. What's the time on this? Okay, so nothing growing on there. I'm not willing to trade off of this if it gives us a gap. Not willing to trade there. I'm not willing to trade that, but this is the point where you would be like that. The reason I say this is because the sweep happened here and the gap didn't form for another like 5, 6. Now, if you trade on the smaller time frame and you're using this system, then you can tweak it to make it work for you. For me, I wouldn't be interested. Even though it gives a small push. Again, right there, doesn't give you it. You're still looking at the same points of relevance for the same principle, which is higher time frame push to the upside. This point, right? Basically take out the low. So I would be willing to trade this if it wants to give us a gap. Oh, that's a sell move. Look for along the principle of that. Okay, you take a BE on that one. Cool. Do we take out the 5-minute low? Yes, we do. Okay, back down to the 1. See if it gives us a space again. Okay, I would let that ride again if it wants that. I'm here. Okay, didn't give us the entry, but the move came. So again, you can see the relevance. The 15, 5, 1 minute, if you're just using that system, see the relevance. But we're using the daily 4-hour 15. So think about it. In times of probability, you have to look at it being more probable across a higher time frame for there to be less trades. Doing good, just check it. Yes, sir. Good. Glad you're well. Well, you know where we're at. If I need help, dude, feel free. Big potential there. Big potential. You still working nights, Antonio? guys. Like I said, I've referenced that 1 minute. Clean move, right? Now we're looking for a larger version of this. Where I wrote that was. 6 minutes left. Yeah. That will be below the liquid low. Target would be, well, we only have one target on higher time frame. 7.5R right there. Why are you not using the 1 hour instead of the 4 hours? Why am I not using the 1 hour instead of the 4 hour? It's just down to personal preference, really, mate. Use the 1 hour. But 1 hour again is going to give you more entries with less probability. 4 hour is going to really reduce your entries down a lot. But the liquid's going to be higher, the probability of price moving is going to be higher. It goes down to your preference. Sorry. Prefer the 1 hour? Go with the 1 hour. You prefer the 4? Go with the 4. It's really down to what you prefer. Like I just showcased, in the Keep It Simple series, everything I show in terms of the principle is, for example, because I'm only using in the Keep It Simple series, I'm only using 2. Yeah, only using 2 time frames. One for the bias. That looks terrible. One for the bias, and then one for the entry, right? Whereas what I'm using is 3 time frames. One for bias, one for points of interest, and one for entry. So it just depends what you're using. 2, all you're going to be doing is finding the direction on 1. And this in the video you'll see I say, like, use these points and apply them to use the points of money out, money in, or money in, money out. So it's always going to be the same relevance. Whether you're doing it to locate money coming in and then a continued sell-off, or you're looking for money coming in and then a continued buy, always going to be the same relevance. Whether you're using a point of liquid, whether you're using an area of interest to spot that thing, and whether you're using 3 time frames, 2 time frames, 1 time frame, it always comes down to the same thing. Is the money in, money out scenario relevant to the time frames we're referencing? That's what it always comes down to. And that's, like I said earlier, here, we're looking for an entry here right now. Bias on the daily, long. Bias on the 4 hour, or sorry, not bias on the 4 hour, points of interest on the 4 hour, the liquid lows. Okay? Entry time frame, 15 minutes. So we're seeing the money out, looking for that money in now. Looks like we're going to get it, right? I showed the same example of the same trade, referencing the 15 minute. So look here, that's the last bullish gap. So we know the bias direction, bullish. Come to the 5 minute. Where's your point of liquidity? Well, it's here. Price takes it on the 5 minute. Go down to the 1. Where's the money in, money out at that point of liquidity, or that point of interest? Right there. Sorry, not there. There. Liquid low. Point money comes in, price taps back into it, and then goes bullish. So the relevance of it is always going to be what your preference is in terms of what you're looking at. Because you can always do the same thing as well. Like, let's go to Euro JPY again, because that was a good pair. Euro JPY, let's go to a completely random point in price. Go to like here. I don't know what happens from here. But we can use the hourly as our point of reference. Hourly as a point of reference, so we're looking for price to go down from here. We can go 30 minute or areas of liquidity. Was one down there, but that's what you are. And then use the 15 minute as your entry point. So in this case, we've got money in, no money out. So target's been hit now. Go back to the 15. Bearish still. 1 hour. We're looking for the point of relevance on the 30 minute. Look it out. Back down to the 15. Is there a point of relevance here? Do we see money in, money out? No, only money in. Okay, now we've got money out. So you'd look for price to sell from here. Aiming for this low. This isn't really an ideal setup, but that's the principle. Price taps into it, a bit long-winded, and sells away. Okay, so it's always the relevance of how you're applying it. Think about it in, let's say, saying this, however you want to do it, whatever time frame you want to apply it to. There is no simple way to go around it. This is pushing back up a little bit here. Ooh. Once we get this alert, know then that there is potential for this to come back on the entry itself, which if it does, so be it. And this is what I want to see as well. I would love for people to take, let's say the daily, right? Daily is your bias. Daily is your bias. 8 hour as your point of interest, and then your 4 hour as your entry. Or shift this whole thing across, use the 4 hour, 2 hour, 1 hour, or use the 2 hour, 1 hour, 30 minute. There's so many variations you can do to it, or you can spread these out. Say, I'm going to use the 8 hour, 2 hour, 15. No, it's always down to the relevance of whatever you're looking. I mean, we can even look at the daily. Go back to Euro JPY again. Okay. All right, we'll just rewind back to here. So right, what direction we're traveling in? Bullish. 8 hour. Is there a point of relevance? Yes, there is. Of course. Get down to here on the 4. Do we shift on the 4? No, we don't. Check to make sure that hasn't come down into another. Okay, it hasn't. That's cool. Do we leave a gap here? Yes, we do. So the idea is we'd set up from here, aiming for the high, stop below the low, gets blasted. Okay, that doesn't work. So in some cases, you're going to find there's certain variations, certain mixtures that just don't blend together. It is. Another point you'd look at. Back to daily, make sure we don't open up any gaps, like so. Bias would of course change. So the principle is always, where is it that price goes in terms of your reference. So if you didn't see me earlier do the lower time frame, then you might be interested in looking at that. Head back and look at that in the live stream. Back to you. Wait, hit a gap now? Ah, okay, so that's now a valid entry. So you apply your risk appropriately. So, yeah. That's it. Why does that keep attached? I'm going to make a coffee, guys, and I'll be right back. Did anyone get triggered into that? Trigger me in. Didn't come past the entry point enough. Barely smudged in. I mean, it's pretty similar to what happened here. It barely tapped in. Not even a tick. Anyone get triggered in? The story of your life, Alex says. Be you. Happens, eh? Yeah, there's a nice move here. Looking for the potential sell off on this. Get a stop above the high here. I think this is the move though that it didn't trigger me in. It missed me by like 0.6. Kind of peak. Is what it is. Ada Heard TV is here. Moderator. Also going to moderate you as well, Alex. I mean, you will probably rarely need to use it, but it's there. You're in the live stream. If you have any reason to use your moderator powers, you can. Remember, guys, keep it simple series. Head over to the YouTube channel and you can watch that. So we're still looking at this at the moment. It's still chopping around a little bit. So nothing too wild going on right now. Didn't come up to this high. Oh, annoying. The way it comes up, skims it, gives a little gap, and then just drops off. We didn't get that. Look on the 5 minute here, point of relevance. Point of relevance for that, this is what I was showing to you guys earlier. You'd be entering there. Stop here. EP would be this high. 1 to 3.2. Nothing crazy. Relevance is there. I think her TV is ignoring you. Saw you and went, fuck this guy. Fucking buddy. Still sitting at that same price level. Alright guys, we're going to head over to the Discord in about 50. Remember, we have a completely risk-free position running here. Gap is bearish, we're running down off of this, so we're looking at that expansive move downside. Oh, U-Chef, we're looking for potential push higher from here as well. Daily gap is bullish, we can push bullish. Midpoint. Price is now tagged in. Let's see if we get a nice push from here. If we don't, we take a loss, we take a loss. That. Just the same as if price comes back up and BEs us after a partial, so be it. It's not the be all and end all. Trading Mondays are never super interesting anyway, so really down to the rest of the week is going to be those moves. The trade that we were running on Friday down here with the Wednesday entry, and then it continued to run all the way through Thursday, Friday, continue to run through. No entry for that breakdown though, only an entry push higher, so here's what it is. So we'll play apart from the U-Chef potential move up, which doesn't really look great. I mean, it hasn't reacted that well, so it is what it is. At the end of the day, not every time it reacts like that. Apart from that, we don't have a huge amount on the radar. Not right now, anyway. GU, sorry, for potential sales down through these lows. plug in here. It's a 9R move. So it's actually a pretty big potential move there. But until we actually tap in or get close to it, we don't have anything to follow at the moment. So remember, as I said before, if you want to join the shortlist for the EA bot, then you can do that with the link in the chat right now. So join our ER trading bot shortlist. EA, not ER. EA trading list. You can do that completely free, and you'll be guaranteed a discount when it's released, and you'll also be kept up to date with any news. And just to top things off, you might even get the bot for free. No, you have to be in it to win it. Just like a trade. Be in it to even consider being able to win. Let's go down to the 5-minute here. So our bias on the 15 is bullish, so see if we can find a 1-minute setup within the same scenario if it wants to deliver. We also had that, even though it's a short term. That's the BE on Euro GBP. So be it. Okay, if we leave this gap open here, another 50 seconds, the potential for a move here, telling us there could be a shift up, but as we said before, taking out a low like this make the move itself a lot more probable. We're not really interested in that. We're more interested in the longer term move if it wants to deliver. And we called our bullish bias here in the Discord after we had a push up high. Some of our members were calling for sweeps of these highs and sell-offs, but our higher time frame bias was bullish and we continued up those targets. So it was a beautiful outcome in the end. And same as this here, we'll see if we can get the move running on that too. And if it does, awesome. Doesn't, is on to the next one. Like we always say, on to the next one. So, okay guys, viewer base is it. Okay, so what's everyone doing for the rest of this afternoon? Does anyone have any setups that any scenarios on the table? There was no gap open. That principle that we showed you doesn't hold relevance unless we come and take out this low. Then seeing that shift would give relevance to that move. But until then, we're not too bothered what happens. Now there's obviously higher time frame like this. Prices come back in. See a shift within here. Probability it could come up to the highs, but who needs to do that? You can just apply the free time frame basis. Either higher time frame, but it's going to take you longer to find your trade setups in terms of trades that you've been given, or you can run a small time frame sort of scalping. Completely up to you. Both of them are going to give you the same setups, just across different time frames and different biases. Can you look at oil? Sure. We'll look at oil and then we'll probably wrap it up. Ugh. We were calling this calling short on this? Yeah, so we were calling short on this from here and here. Because we opened up those gaps. And we had this as a point of relevance. Price didn't give us anything. That would have been a point of relevance, which I don't know if there's anything in there. But that is a monstrous gap. So I would say that price is most likely going to come up to here. But the key to that is don't buy it to the high, sell it from the high. That's a real janky looking chart right now. And this is an example here of don't buy it to the high, that space. Never came back to it. If you're trying to buy it to that high, you would have got absolutely tanked the whole way through. Whereas if you just wait for it to get there and then sell it, you're then doing the opposite. These were the targets. These have been completely wiped by that gap. We had a 15-minute gap open up there. If you look on the 5, points of relevance on the 5, here and here, down to the 1. Potential for a buy side move from here. But that's only a very small and short-term scenario. So it may be completely wrong in terms of higher time frame bias, which we know it is because our higher time frame bias is daily bearish. So but using the 15-minute of relevance, bullish to bearish to bullish again, using the 5-minute, aiming for the high. That little move is still on the table for potential here. Very, very small, and this is like scalping level, so expect the overall hit rate to be lower on lower time frame because you're taking more trades per day. Over a longer period, it will level out the same as the whole system does, but on a smaller time frame, there's going to be more entries, probability, hit rate maybe. In terms of the higher time frame though, Andre, I would say this gap's got to be filled. Ironically, the lower time frame entry I just showcased is buying up to that high if you were in some ways. It's not though because you're only trading a very tiny portion of the overall move. You know, the gap is here. But the relevance is ironically against the bias on the higher time frame if you're following that. So yeah, principles in place. Alright guys, we're going to head across to the Discord now. If you're not in the Discord, then you can find the link below for it. We're going to be jumping in the VIP floor today. If you are a VIP, then of course join me over there. If not, we'll catch you all in tomorrow's live stream. Hope you've enjoyed today's live stream, guys, and I will see you in the next one. Oh, just before we go, check you, Chef, quickly. Okay, so nice little tagging and rejection. So we're just looking for that little shift up here. And you has that tagged in? No. Yeah. So yeah. Plodding on and looking for the same principles over and over and over. Till next time, guys. Peace, love, and I will see you all then. Enjoy the rest of your day, guys.